you putting money right now?
Right now, we're looking at all these markets because some of them are really down substantially. So we're seeing incredible opportunities and bargains. Our focus, of course, is on India to begin with because there are lots of things happening there. And, of course, you must remember this oil price decline is very, very good for India. It's good for China. It's good for all these oil importing countries. So things are looking good in some of those areas. But, of course, you know, now's the time to be buying like porcupines make love.
Carefully, I think
that's a good way to put it. Timing is the real question. We just heard Jim O'Neill talking about the fact that it appears that Asian countries may be getting more ahead of this than Western countries. Obviously, you spend a lot of time in Asia. Do you get that feeling? Is it time to start buying? There may be bargains, but there's still risk.
No, I think it's true that Asians tend to be much more cautious. When something hits like this, they move very quickly to try to prevent infection, et cetera, et cetera. They're really on top of it. And you must remember, these are richer countries compared to, let's say, some countries here in Africa and some countries in Latin America. So they have the resources to go after it. But I think we have to be very careful with the numbers because it all depends on how many kits are available, how many tests have been taken. I think the reason why you have high numbers in Korea is because the Koreans are very good in testing people and having the kits available and doing the job to detect the coronavirus. So I think, yes, Asia is in pretty good shape.
Yeah, but is it time to start putting money to work? Obviously, you're identifying things you want to buy, but are you buying, or is the risk still out there and you want to hold off a little bit?
What we're doing is switching. In other words, those stocks that we have not been too excited about for one reason or another, we're cutting and then adding to those stocks that, you know, we're fundamentally much more confident about. So it's really a question of buying and selling, but actually more buying rather than selling.
So, Mark, does that mean that you're taking on more risk or just maybe shifting where the risk actually is?
Shifting away from risk, actually. In other words, looking at the whole portfolio and saying, look, these companies sort of so-so, we're not that excited about them. Let's get rid of them now. We were thinking of getting rid of them earlier, but now we'll quicken the pace and use that money to buy the things that we really like. So it's a good opportunity to make those switches.
How are you finding market structure and liquidity these days, particularly overseas? A lot of people wondering if we're going to see a 2008-like scenario.
Well, you know, liquidity in some of these markets is poor in any case. I mean, you go in and you be lucky to find a stock that you like that is doing a turnover of $2 or $3 million a day. So liquidity is an issue that you have in emerging markets, particularly in frontier markets. So you've got to live with it and go in slowly. And of course, when you want to get out, you've got to do it slowly as well.
The whole porcupine analogy makes more sense. Okay, Mark, you mentioned that you like India. What other areas / sectors do you like right now?
Right now, I think Turkey deserves a close look because they're a big oil importer and their oil bill will be going down. So that's one factor. Of course, the problems at the border in the south is something we have to look at. But generally speaking, there's some terrific bargains in Turkey right now. So we're looking there, particularly in the consumer area, in companies that are not affected so much by the fall in the Turkish lira. You know, they're not importing very much. They're exporting. So that's one area. The other area would be Indonesia. Indonesia is quite interesting. Again, oil importer will benefit from lower oil costs. And there are lots of consumer stocks there that look quite interesting that we're looking at.
Across Asia, how is China and its economy being perceived right now? Is the worst over and the rebound effects, the knock-on effects in other Asian countries starting to fade? Or is that still going to be a lasting issue as people try to get past the basic halt in the Chinese economy?
It's still going to be an issue, and not only for Asia, but globally as well. You must remember, China is a major producer of raw materials for pharmaceuticals. For example, I was looking at numbers for India. 70% of their pharmaceutical raw materials come from China. automobile spare parts, 25% of the total. So these are real problems in the supply chain, and they're going to impact everybody globally, but particularly Asian countries. So we've got to expect a month, 2 months of this before China gets going again. As you know, the Chinese authorities are trying to get people to work as fast as possible because they know they're going to lose market share if this continues to go on as it has been going on now. So I think that is going to be the key going forward. But expect a month or 2 months more of pain on the supply chain side.
Mark, a really pedestrian question. You buying gold right now?
I love gold, as you know. I've been saying this for a year. I've got enough myself at this stage of the game, but if there's a price correction, I may add.
So you wouldn't be selling up here or anything like that, booking some nice profits?
Oh, no, I wouldn't be selling at this stage, no.
Is gold a worthwhile investment for other people to make at this point? It's been very volatile, surprising some people who thought it would just do nothing but go up because of what's been happening.
Yeah, I think the situation with gold is, you know, again, with this fear crisis, people want to get into cash, so they sell everything, including gold. But I think the trend for gold is going to continue to go up for a number of reasons. First of all, the supply of money supply is going through the roof. And if you look at all the other currencies being created on the internet, you realize that nobody knows what the money supply is, number one. Number two, you're seeing the lower and lower interest rates. We're getting into, of course, in Europe, we're in negative territory already, but where do people put their money? It doesn't make sense to be putting in the bank when you're not getting any interest. In fact, you have to pay the bank to keep your money. So I think those are good reasons to have gold.